Investing in mutual funds. Oh, hi there. I didn't see you come in. I'm Steve Michos, and today we're talking about investing in mutual funds. So what exactly is a mutual fund? Well, a mutual fund is kind of like a stock in the sense that you're still investing in the stock market. The difference is, when you invest in a mutual fund, you're investing in a whole bunch of stocks at the same time, but little bits and pieces of each stock. So you're spending a lot less and you're diversifying your portfolio without having to break your bank. Some advantages to investing in mutual funds are the fact that you don't have to keep track of it. There's a very low pain in the ass factor, or PITA factor. You have professionals that are experienced in the stock market playing around with the stocks in the fund for you, so you don't have to do any of the work. You're merely supporting the cause with your funds. You're diversifying your portfolio, as I mentioned earlier, so you're able to safeguard yourself from market fluctuation. Accessibility. You can sell your investment back to the fund owner. It's a very liquid investment, so you don't have to go out and find a seller, because they'll buy it back. However, with every upside, of course, there's a downside. The risk is you're still investing in the stock market, so stocks can do poorly. So there's no guarantee that you're making money just because you're diversifying and investing in a mutual fund. Also, the company will provide you with records showing how the stocks are doing. You don't have to do any of the homework yourself to see how you're profiting. The key is to trust a company that'll perform well on your behalf. Now that we know what a mutual fund is, we can look into a certain scenario involving one of my customers. I got a letter from Chris, and he writes, "Dear Steve, first of all, I think your show's awesome, because you're awesome." Thanks, Chris. He writes, "I'm a second-year university student on a full football scholarship, who thus has limited school expenses and saves $4,000 each summer from employment. What should I do with my money?" Well, if you're asking me, I think it would be wise to invest in a mutual fund. Which mutual fund do you think? Well, for some reason I felt the need to look up a mutual fund that actually matches your scenario perfectly. It's called the Lakeview Discipline Leadership High Income Fund. I was able to identify this fund by going on globefund.com and using their Globe Fund filter, which allowed me to identify this one single stock. It gave me one result. I searched for a balanced fund investing in Canadian equity securities with a performance over the last 3 years of 5% or more. And I looked for a Globe Fund rating of 5 stars. So the best way to go through this fund is maybe answering a few questions and describing what the fund entails along the way. So the first thing to go over is, what sort of fund should you invest in? Well, my recommendation is the high income fund, because if you have a full scholarship through football for university, there's no real need for you to have a major significant gain. It's alright to be taking in little bits of income and maybe saving for retirement later after you graduate. So with the Canadian Balanced Equity Fund I've chosen, it has a split amongst its assets of about 63% stocks, 32% bonds, and about 4% cash. That probably doesn't add up, but I was just sort of rounding. This sort of investment tends to generate stable income for the investor. So for someone like Chris who would invest in this, he'd be generating his $4,000 from his summer job, investing that in here, and he'd have a really nice income coming in each year for someone who really has no liabilities if school's already paid for. Not to mention, with somebody like Chris, he's able to invest in riskier investments because he has no real liabilities. Someone who would have more liabilities, someone who's not on a football scholarship, may want to invest in something safer like a savings account or a GIC. something more guaranteed. So getting back to the fund itself, I used the fund filter and I found the Lakeview Discipline Leadership High Income Fund. It's a Canadian equity fund sponsored by Lakeview Asset Management Incorporated and managed by Barometer Capital Management Incorporated. Some of you are probably thinking, well, who the heck's Lakeview? Who the heck's Barometer? What makes them so great? Well, with the use of globefund.com, I'm able to look at the top movers, and what I was ideally looking for were the top movers over the last 3 years, because I wanted a roughly 5-year-old, 3-year-old fund. Being the top mover with 5.58% return over the last 3 years and 7.68% returns over the last 5 years respectively. Their primary objective is to generate a high level of income by investing in Canadian income trusts, fixed income securities, and other Canadian income producing securities. In a way, provided it performs well, it's as if you were making a paycheck for supporting a cause. Later on, he could take on his capital gains and reinvest it into longer term investments geared more towards his retirement. So what sort of style does the manager use in his investing on your behalf? So with this portfolio, the managers are looking for sectors that are doing fairly well compared to other sectors. Essentially, their attention is very focused on the market and they're looking for only the best investments to help you and any other clients with their company. And they give themselves lots of protection by putting stop loss orders on a lot of their investment. Now to look at the returns over the last several years for the company. Over the last 5 years, they've had a return of 6.7%. Over the last 3 years, 4.5%. But in the last year, with the bounce back from the recession, they brought back 21.6% returns. If you look at the chart shown on the computer down there, you'll see that the S&P TSX capped income total return was doing significantly better than this fund until about 2008 when the recession hit. Now the fund is doing slightly better as they've recovered currently. Just to give an idea of how the competition's doing, I went to the next company on the top movers list in the last 3 years, and I came across FMOQ Monthly Income Fund. Now this fund is much younger, so I can't give you a 5-year picture, but in the last 3 years they've averaged 4.26% returns, and in the last year they got 24.51% returns. Now you're thinking, that's still a lot of dough for 1 year. Well, coming back from the recession, all the numbers tend to be high, because they all went down and now they're going back up. So the difference is to see who's doing better, and who's been around longer, and who's going to give you the better performance over the long term.